It's no secret that I'm a huge advocate of ETF investing, but what on earth is DIVB? How is it even possible that I hadn't heard of this top tier dividend ETF that was established back in 2017? I recently dropped a video about the best performing dividend ETFs midway through 2024. I asked this wonderful community for your favorite dividend ETFs, and many of you highly recommend that I include DIVB in my next update. I dug into this one. I'm excited to share my findings. This was a lot of fun to research, and I'm genuinely impressed by what I found. It will definitely make the cut for my next dividend ETF update video. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please ravage that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind as you watch this video. I'm happy to announce that all the spreadsheets that you see in my videos can now be downloaded for free. Feel free to make a copy and make it your own. The Excel or Google Sheets, I do make them all in both formats just because I don't know your preference, can be found in the description to this video or under my general channel information. My other links that you see out there will only promote products or services that I genuinely use and believe in. If one of them tickles your fancy, consider using my link to support the channel, and more importantly, to save yourself some money. Come on, you know what time it is. Let's grow. DIVB Basics. I'll break it down like this. VYM and DGRO had a baby. They named it DIVB. The underlying holdings of DIVB have a 63% weighted overlap with VYM and a 50% weighted overlap with DGRO. And just so we're clear, the rest of this video, I'm gonna call it DIVB because it's easier to say, DIVB. I'm not familiar enough with this one to know the common slang. So from this point forward, it's DIVB. DIVB is a passively managed dividend ETF that seeks to track the performance of the Morningstar US Dividend and Buyback Index. It lowered its expense ratio from 25 basis points all the way down to 5 bips in October of 2022. It's time to cover the DIVB methodology. It has an equity universe that includes something like 97% of all the equities out there, and it selects companies with the largest dividend and buyback programs. It's measured by the dollar value, and then it's weighted by a total shareholder yield multiplier. And the shareholder yield gives a 75% weighting to dividend yield and a 25% weighting to the net buyback yield. A buyback is when a company purchases its own shares in the stock market. This reduces the number of outstanding shares that are out there on the market, and therefore it will increase the earnings per share. The profits are being spread across fewer shares. And not everyone loves stock buybacks, but they will consistently either decrease the price to earnings ratio or increase the share price. On paper, it's good for the existing shareholders one way or another. Buybacks typically improve long-term returns as well. All right, fellow nerds, it's time for the data diving. DIVB Key Metrics. The key dividend metrics of DIVB absolutely blew me away at first glance. And we covered this a lot on the channel, but the big three key metrics for dividend ETFs are the dividend yield, how much this thing is paying us, the dividend growth rate, how much that amount is growing over the years, because that baby can compound, and the total returns to assure that we're not falling into a yield trap. And I must admit that I'm a sucker for the dividend growth rate. It's my favorite of the three metrics by far and away for dividend ETFs. Let me show you why DIVB was love at first sight. Here we are in Seeking Alpha, and I pulled up none other than DIVB as promised. And we can see here it's the iShares Core Dividend ETF. And the first thing that I always look at here on this screen is the expense ratio. And as I mentioned earlier, it's only 5 basis points. That's as low as it gets for dividend ETFs. And the next thing we'll take a look at here is this assets under management. I am blown away that this thing has been around since 2017 and it has under $500 million under management. And that is exactly why I have not seen this thing. When I run screeners and look around, you know I always look for things under 50 basis points on the expense ratio, which clearly we have here. I don't say this very often, but I usually set my assets under management at 2 billion and higher. And this just gets rid of a lot of junk, frankly, and it lets me focus in on some other other key metrics within my spreadsheets that I want to see. So this one's hit for me, mainly because of this AUM. And then I won't scroll down to the summary because we know it's passively managed and it follows an index, which I love to see with the majority of my ETFs. Let's go over to its holding breakdown. So this one has a little bit of FDVV written on it. It's just over a quarter of technology at 26%. And then we have a nice chunk of financials as well at 18%. And its healthcare is 10, industrials is 10, and energy and consumer defensive are 8 and 7. And then you pop over here because there's one more meaningful number, and that's consumer cyclical is at about 7% of the fund. So not a bad holdings breakdown, fairly balanced. It is for me with my dividend ETFs, and a lot of them have this problem. The technology is a little too high for me. That's one of the reasons I like SCHD so much, which sits around 9%. It's a better counterbalance to VGT and QQQM, which I'm heavy in. But in a vacuum, just looking at this for what it is, nothing is too outlandish here. The top 10 holdings are fairly interesting on this one. Nothing exceeds 4.9%. On the rebalance dates. You can see that Cisco Systems has exceeded that amount, but that's just within a quarter. So when these rebalance on a quarterly basis, 4.9 is the cap. And the top 10, you have Cisco, IBM, Accenture, Texas Instruments, ExxonMobil, JP Morgan, Chevron, Verizon, Johnson & Johnson, and the Home Depot. So these are pretty big names, kind of in a funky order, but you know, a pretty solid top 10 holdings, I would say. And again, nothing's too out of balance. The top 10 holdings only make up 27.8% of the fund. That is extremely low, and I love that. It gets some balance in this thing, a little diversity. And then it also has 438 holdings. So it has a nice sample size there as well. All right, let's get into the good stuff. We're here on the dividends tab. You guys know I love this tab. And my first thought when I pulled this one up is, well, I can't say that because this is a family-friendly channel. I thought, wow, this is incredible. There, I censored myself there. Look at this trailing 12-month dividend CAGR. That's compound annual growth rate, over 24%. It's like, yeah, but there's no way they did that. Oh my goodness. Over 22% per year on the last 3 years of the dividend CAGR. And then the dividend growth rate in the last 5 years, to add even more merit, is 16.8%. And it hasn't been around for 10 years yet, but what data is there is astronomically impressive. And I should mention, it's grown its dividend each year as well at 6 years in a row. And the last thing that we haven't covered here on the dividend summary is that it has a pretty juicy starting yield compared to a lot of the dividend growth ETFs like VIG and DGRO, for example, of 2.65%. That's very solid. One thing I would like to point out, and it's not to rain on the parade, but these stats here look amazing. Oh, and I skipped dividend yield there, so I guess we didn't even need the scorecard. I wanted to audit it a little bit and find out some more details. So I came out to the dividend growth section within the dividends tab, and I put it to 10-year. This isn't necessarily bad news, but it gives me a little reason for concern. We started in 2017, so we're gonna skip that one. And then in 2018 here, and it always shows the year before, we had 60 cents, and it looks pretty flat though. 64 cents in 19, 69 cents in 2020. Not a lot of growth, but pretty nice. 70 cents, just 1 penny more in 21, and then 76 cents in 2022. That is a bit alarming because what happens here is we go from 76 cents to $1.31. This one single outlier, which again is a good thing, but it's just one big pop, juiced up the trailing 12, the 3-year and the 5-year, because all those are dependent on the most data point and then looking back to, you know, last year or 3 years ago or 5 years ago, respectively. It is nice, but I would like to see a little more consistency here. And I should add, there haven't been any special dividends. There was one quite a while ago. So that increase isn't due to a random outlier. I checked that as well. A lot of times when you have that big pop, it'll be a special event as opposed to a quarterly payment. But as you can see here, we've just had 4 payments per year. And I'll scroll down a little and you can see here, there was a small special one, but that, you know, that's not really juicing the numbers. If anything, we were looking for something special here that's throwing off the overall balance. Something to watch on the growth. Okay, and now we're out on the charting tab. We love to hang out here too. And as per usual, we are viewing total return. So this does include dividends on these returns. We're defaulting here to the year-to-date tab. And I'm really gonna put this thing through the ringer. I'm being a bully right now because we know that FDVV from one of my recent videos is fairly easily the best performer in the last 5 years and in. So I'm stacking it up hard right away. And then SCHD, it's faded in the last 5 years. If we did 11, it would look better, but I'm not bitter. But I gotta throw it in because it's the one I hold. And then DGRO and VIG are my two favorite dividend growth ETFs. And then of course, I always throw the market in VU. Clearly not a dividend option, but it's fun to see how everything, growth and dividend, no matter what I'm looking at here, we like to see how it stacks up against the market itself. So on year to date, DIVB is looking pretty good at 16.6. Again, our reigning champion FDVV is nearly 20%, which I must point out is ahead of the market here. That's very impressive. Our growers are somewhere in the 15% range. In my bay, SCHD is, well, you know what I like to say, bringing it up the caboose at 11.6. So DIVB looking good so far on the year, but of course we always need to zoom out a little bit. So let's look at a full year. It's nearly 27%, just behind FDVV. Very impressive stuff. And the market slightly outshines the two champs there on the left. And then we have our growers. Man, these are locked in a battle here. This is kind of fun to see. I always track these against each other on some spreadsheets and things that I do on the side. But VIG has a slight lead on DGRO. And then of course, SCHD, 17.5. Let's zoom it out 3 years. Come on, SCA, okay, never mind. So DIVB, it looks like it had a bit of a rough 3 years by comparison at 25% compared to FDVV's 42.5%, which, goodness, this is ridiculous. 42% versus the market, which has dominated the last 3 years, I should say, because of the growth aspect, 30%. Goodness, that thing can't be stopped. And then VIG's separating itself a little bit from DGRO, just over 26.5% to 24.7. And SCHD, man, you make me so sad, 19.34%. Now I think, yes, we can. Let's zoom it out 5 years. Take a quick look here because, again, I look at these live with you. The market is outshining everything 111% as we would expect in these bull years, but FDVV is right there at 105.5. DIVB is right behind it though, very impressive at 98.2%. Okay, and finally, SCHD, 88.8% is crushing. Not really, but I want to feel better about myself. The growers here at DGRO's 83.8 and VIG's 82.4. So DGRO takes the long-term lead. Okay, and what I've done here is I put in a custom range to get since inception, and it's when it started getting data, so it might not be perfect, but it's 11/10/2017 for 2,480 days worth, and you can see they all have that amount. DIVB is at 123%. It's just trailing FDVV in that time at 131.99, but it's ahead of some of my favorites, SCHD and DGRO in that window at 115 and 117 respectively. It is falling short just slightly of VIG at 126.9. It's interesting, VIG past DGRO. They really flip-flop, it's crazy. You can cherry pick to make either one look better depending on what you want to show. And then of course the market is slightly ahead of everything, but not too bad actually, in 6 years and change. So overall on this charting, I would say DIVB did incredibly well, especially for something I didn't even know about that long ago. It's wild. And I do also like the fund's methodology as well. This one is truly on my watch with intentions list and will definitely make the top dividend ETFs next time. So thank you once again for all of you that recommended this one. DIVB ended up having a couple red, well, let's call them orange flags compared to my first impressions, but it's still very solid. Let's dive into a realistic scenario to see what this thing can do. DIVB backtest versus the top dividend ETFs. There are a lot of amazing dividend ETFs that we can use for the competition out in Portfolio Visualizer. But I'm gonna be a bully in this one and put it up against the top performing dividend ETF during this window, FDVV. And we'll toss in the other top dividend ETFs along with the S&P 500 for comparison as well. Let's do it. Okay, we're out here on Portfolio Visualizer, and once again, I'm gonna be tough on DIVB. I have it as Portfolio 1, 100%, as you can see here. I'm putting it up against the best known performer in this time period, FDVV, which is number 2 here at 100%. And then I decided to put some of my favorites. I know SCHD hasn't been great, but it has pretty good growth and PE and some other things, drawdowns, best worst year and that kind of stuff. And then I combined it with the dividend growers. I thought that'd make an interesting portfolio to compare. If DIVB can beat that, that's pretty good. So I put 33% of VIG, 33% of DGRO, I know it's hard to see, and then 34% of SCHD to make it an even 100 across the board. And before we hit analyze, out here on the settings tab, we're pulling in as many years as possible. It's going to be far fewer years because of DIVB's age, and we're including year to date for 2024 so far. Initial amount, $10,000, and we're going to contribute on a monthly basis, $1,000. And then when we scroll down a little more, the rebalance annually will affect only that third portfolio. The other ones have 1 holdings. Reinvest dividends, of course, and display income. Yes, we'll love to see that. And let's hit analyze. And as I mentioned earlier, we can see here we only get to see the first full year. So it's from 1/1/2018 through 8/27/2024. So that at least gives us 6 years and change of results. And we're going to start at the performance summary as I always do. DIVB did outperform the SCHD, VIG, and DGRO portfolio. It did fall short of FDVV, but not by a ton. So you start with 10,000, put in that 1,000 a month, and you end up with a pretty juicy $146,600 to FDVV's 154.3K. And then the hybrid portfolio fell a bit short with 141.7K. And you can see the market here slightly outperformed them all. I would say DIVB did a pretty solid job considering we're stacking it up against what we retroactively know, hindsight's 2020, to be the best performer in this timeline. And it still battled pretty good. Let's look at some of we'll get into the returns down below. Its best year was the highest of the dividend ones and the market actually. The worst year was a bit worse, but not too bad. You can see the market was down 18% in 2022 and FDVV, wow, that's really good, down 4%. And DIVB was down 10.5%. Maximum drawdowns, reasonably similar. You lose a little bit more with FDVV, and that makes sense because it's pretty tech heavy, although so is DIVB. There's just different methodologies though. And you can see DIVB is a little closer to the market, VU here, than FDVV, but it's pretty close. They're all pretty tame here on the correlation. Looking at the annual returns, DIVB got off to a terrible start here in 2018 when FDVV was almost flat. The other ones were all down, including the market. But then you can see it bounce right back in 2019 with the best performance, even over the market. It was pretty standard here in 2020. It was the highest again in 2021, including the market. You can see that correlation with the market here. When it goes down, it's down quite a bit. Up, it's up quite a bit. Just generally speaking, it's not perfect, of course. And then last year, the market kind of ran away with things. FDVV was very solid as well. And this year so far, it falls right in between FDVV and SCHD. It's up 17.15% to FDVV's almost 20, and the market is there at 19. So interesting, no crazy outliers that are alarming here. I think it looks pretty solid in the markets it's gotten to see. Granted, we don't have a ton of history. I would like to see a little more. On the trailing returns, these are always interesting. These don't care about contributions, it's just the annualized returns. So during the full horizon, we have the champion FDVV at 12.37%, and DIVB was just ahead of the hybrid portfolio, 11.68 to 11.51. And then of course the market, as we knew in this bull run, has outperformed them all by quite a margin, over 1%, which is a huge compounding difference. The 5-year returns, we have FDVV still looking to be the best here, and DIVB separates itself a little bit here from the hybrid portfolio in this one by almost a full percent, and then the market almost at 15%. And the last 3 years, this is where FDVV has really made its money. It's crushed even the market at 12.38, but DIVB is just over 8, and the hybrid of my favorites is 7.44. Am I doing this wrong? And in the last bull year, the market takes the lead here, but of the ones we're looking at, FDVV once again steps up. DIVB is here at 20.53, and my favorites trail the market a little. We all know that this is due primarily to a nice tech boom. And DIVB along with FDVV are just over 25% tech, so that really helps them. When the reversion to the mean towards value happens, particularly in here, SCHD is going to look a lot better. All right, and now we have our portfolio income, and good Lord, look at FDVV. It's dominant. Oh, I guess we don't have the compounding years, and VIG and DGRO have very low yields. This makes a little more sense with that context, but still, they're not catching up too much. FDVV and DIVB have been growing pretty well. And this goes back to what I talked about earlier in Seeking Alpha. If we're looking at the blue bar here with DIVB, it starts pretty low, and it doesn't build a ton of momentum in any one year except for that huge outlier year, which is great. And I hope it's the new baseline, but it'll be interesting to see if it can keep building. And it looks like the other ones, to be fair, had a little bit of an outlier themselves as well. And I know this one's getting pretty long here, but I just like to take a look at this score table here. We have the trailing 12 month and the SEC yield, but you can see it's in the upper 2s for DIVB. The low expense ratio is nice, and its PE ratio, which is what I like to show here, is 18.63. Pretty solid. And you can see here it's pretty high in tech at just over 25%, like I mentioned. And for some context, FDVV's PE is nearly 20, so a little less value here, and the same amount of tech roughly at just over a quarter. And then our hybrid portfolio here has a PE of VIG and DGRO do have a lot of growth. You can see 24.4 and 21.6. That's what's always scared me a little about them compared to SCHD at 16.98. Because I hold so much VGT and QQQM, I like this counterbalance of SCHD. I know it will underperform in bull markets, but these guys, along with the ones above, just kind of sprinkle in a lot of tech that makes me uneasy from a diversification standpoint. But the weighted average here, not overly relevant because I'm here in a vacuum, is 21, a bit higher than I would think. And again, you can't really look at this stuff. 16.3, but SCHD weighs that down. So this is just I guess it gives you a nice little balance actually, these three. The highest sector is 18.92, which is financials. Pretty good diversification. They're all under 20. That's my cap for the HODL factory for sector balance. My individual stocks that have beat the market by a wide margin. DIVB passes yet another test with flying colors. That brings up the question, am I buying DIVB? DIVB has earned a spot on my list of top dividend ETFs, and it will be included in my next update. But I'm not ready to smash that buy button quite yet. I think it has solid methodology and an appealing expense ratio. The one thing that caused a bit of concern was the lack of consistent dividend growth. And I know the trailing 12 months, the 3 and the 5-year dividend growth rate looked amazing on paper, but most of that growth came from one single year on all those metrics. I'm genuinely excited to watch this one moving forward. And I'm also just as excited to let you know that we had 4 new channel members join last week. A huge shout out to Kelly, Katie, Tanya, and Jay. I appreciate you becoming channel members, and of course, a shout out to all of you that have been here all along. I'm in the middle of revamping the perks. You've probably seen the recent posts lately, but I aim to make this worth everyone's while long-term moving forward. Check out one of these 2 videos to continue down your path towards financial freedom. You really have everything you need to make it to the finish line. Thanks for watching, and I will see you here next Sunday. Peace.